Okay, and we're live. Roy, happy late bootleg.
Happy late bootleg indeed. Yes. I was 15 minutes late for Friday, and Tevis is like, hey, I know
Yeah.
how to get back at you. Let's make it super late on. No, just kidding. No, honestly, we're just glad to be able to have it. And we are thinking about moving bootleg to Mondays instead of Tuesday. So if you like Tuesday and you prefer Tuesday, then just don't watch on Monday and save it for Tuesday. But I think our schedule will allow some more consistency as far as the time and the show as well. I oftentimes have something about once a month that interrupts things on a regular schedule on Tuesday. So this is a bit better. And Tevis works like a dog, so especially on Tuesday.
Yeah, let me change it in my calendar actually so I don't forget for next week. Okay, bootleg Monday, 6 p.m. Done.
All right, sounds good. I need to update the same, but yeah, regardless, we have quite the show tonight. A lot of stuff that we're going to cover. Main topics right now are going to be eBay and GameStop, the Ryan Cohen stuff. A lot on that. A little bit on PayPal and their earnings and Venmo. Just some interesting things, even though I'm not in it. It's still of interest to a lot of folks, including myself. Palantir earnings and earnings reaction. Tevis always has to pound the table on NBIS at all-time highs, deservedly so. So we're going to let him. And we'll also talk a little bit about our chat with SoFi IR team and what that entailed as well. As always, we're going to do Q&A at the end. So if it's not related to any topics we're discussing, we'll try to hit, what is it, 187 of those questions in the, yeah, maybe not that many. But all right. So what are you drinking tonight, Tevis?
I have a shitty warm Celsius because I didn't throw any in the fridge. Oh, wow. Is that a new flavor? Peach?
It's peach. It's man, I really like the peach flavor. It actually tastes like peach. A lot of them will taste like the peach rings, which I like those too. But this I think is actually better than Monster, which is crazy because I love Monster. So
Yeah, thank you.
not a sponsor. I just like them.
DS Greg says, I have $100. I'm trying to buy PayPal too. Well, you're in the
Yeah.
running.
Let's start there, and it's a wild tell. I think that we probably need to play or should play at least
God.
this clip from Ryan Cohen, or at least 2.5 minutes or so of this, if you're good with it. That was interview on CNBC. Now, there's been a couple of interviews since then. I did watch one of them today. I didn't watch the other on Fox, but this is a classic for a reason. So let me know if you can hear this.
Invariably, the
You can
audience,
put it up a
and I
bit.
know a lot of people are going to ask, how does the math for you? Given the price tag, $56 billion, given the market cap of GameStop, which is a fraction of that, I know you have this $20 billion financing letter from TD, but sort of walk us through how you could get to that price and how it would work.
It's on our website. It's half cash, half stock, but the details are on our website.
Can you help? I've read them, but can you help our audience understand them?
Yeah. Which part exactly?
Well, I think we can start with the idea that the market cap of GameStop is, call it, $11 billion. You have $9 billion on your balance sheet. Arguably, if you're providing effectively all of your stock, and then the cash that gets you to 20, you have this letter from TD. That's another 20. We're now at 40, but we're still off by, call it, 16. And the 20, as far as I understand, while it's considered a highly confident letter, meaning TD saying they're highly confident that they would provide the financing, it's not locked financing.
Yeah, we'll see what happens.
Cool.
It's so bad.
I hear you. I understand that. I'm just trying to understand where the rest of the money would come from.
It's half cash, half stock.
I hear you. I'm just saying that math doesn't get you to the price that you're offering.
So,
Brian, that's a pretty
so
straightforward question. I don't get it. Like, where's the rest of the money coming from? Andrew laid it out pretty clearly.
I don't understand your question. We're offering half cash, half stock, and we have the ability to issue stock in order to get the deal done. But the full details of the offer are on our website.
But you're on our air. We thought we'd get.
So, but I don't understand your question.
So Ryan, sorry, it's Melissa Liebeck at the next.
All right, that's where that clip ends. There's a lot more to it. You know, it's like maybe a 10-minute interview. It's not all as awkward, but there's a good number, a couple of other minutes where you have like everybody from CNBC trying to be like, no, Ryan, it's a simple question. What's going on here? So, yeah, Rusty, I didn't hear Josh Brown's joke. I'm sure it was a good one. Josh Brown's a clever guy. But yeah, essentially what's wrong is if you look at the market cap, this is one of the things where, you know, a lot of people are, when they're newer investors, they don't pay attention to. The size of the market cap matters immensely. It's one of the reasons why SoFi, for instance, would not go out and buy JP Morgan Chase. The market cap doesn't work. So you either have to have a lot of money coming from external sources or dilute a lot. Now, the problem is, so they have some money on hand. They have a letter that is, I think, high degree of credibility that's basically functions as a 1-year floater loan. So basically they can use that. And then the idea is that after that year, they transition into another form of credit or they pay it back or whatever. There's a lot of different options there. And I mean, they could even dilute once they have the merged GameStop and eBay. And then you also have the market cap of GameStop. And if you take the entire market cap of GameStop and you add that to the amount of cash that they have, it's still not enough for the offer that they're making. And so, you know, rolling equity, yes, I understand. But ultimately, like typically if you dilute, for instance, we've seen this with SoFi, 10% dilution means, you know, 10% off the share price, the market cap stays roughly the same. There are exceptions, but that's generally the way it works. And so I think they're trying to say, like, okay, are you just going to like dilute your shareholders a whole lot and hope that they don't mind paying a premium over what that would imply? Or is there something else going on here? Or is it like not really half and half? A little bit more explanation on TBPN today, but not much more. Beyond the humor aspect, Tevis, what'd you think?
I have so many thoughts, man. Like, I understand that you have beef with CNBC and all these networks, but like, why would you agree to come on? You didn't make them look stupid. You just made yourself look stupid. First of all. Second of all, what kind of confidence does that put in any counterparty or investor that's in GME to be like, oh, that guy? Yeah, I definitely want to invest with him, or he's going to be a good steward of my money. If you can't, like, I understand the strategic piece of not wanting to get pigeonholed into saying on TV that we're going to dilute the absolute crap out of shareholders, 99% plus dilution. I get that. That looks really bad. But what he said looks equally bad because that's what the conclusion that everybody is coming to. So it's like, just don't take the interview request. Like, it's not that hard.
Yeah, there's a mentality among CEOs that all press is good press. Even if it's bad press, it gets you in the limelight and it gets things moving. And there actually are some things that he may. I don't know how serious this bid is for eBay. It sounded on the TBPN interview today that it was credible. That it does seem like he has kind of a plan, at least at the and. It in some sense it makes sense. Michael Burry, by the way, said, "Yeah, this makes total sense." And then after thinking about it for about a day, he's like, "Well, actually, here's 30-something better targets." And then he told the Wall Street Journal that he sold all his GameStop positions. So I think it took him not very long to realize, okay, whatever he was in GameStop for originally, he's like, okay, this is not part of the thesis, and so he exited completely. Now that doesn't mean GameStop. That this isn't going to happen doesn't mean GameStop's not going to go to the moon or whatever. I've been inverse Burry on quite a few positions and come out quite well. So, and more on that on our next topic. But
It absolutely does mean that. Sorry to disagree, but like if you're buying into this, you're either delusional or you're just an idiot. Because quite frankly, you're signing yourself up to get the crap diluted out of you. And I'm just shocked, Roy, at who is dumb enough on the other side of that deal to buy all of those new shares that they're issuing.
Yeah, well, so like, they've not issued anything, and I actually think that while they wouldn't mind having eBay in-house, I think that there's two possible alternative goals.
You're not going to get it, dude. Like, I'm sorry, but like,
probably not.
Even eBay, like, okay, half cash, half stock. It's like, dude, that stock won't even be worth the toilet paper that it's printed on by the time they're done with it. Do you think as the eBay team, they'd be like, yeah, let's take that deal? Of course not. Absolutely not. And don't forget, Ryan Cohen has all of these incentives around his own compensation that he wants to hit. Like, man, this is the scummiest crap that I've seen in a long, long time. And it's absolutely just a publicity stunt at this point. It's a desperation move. It reeks 100 miles away. And I wouldn't touch this. If you had a gun to my head to invest in this shit, I wouldn't touch it. And I'm surprised how the stock is not down like 50% already.
Yeah, so to be fair, I think that there might be a couple other things going on. Like sometimes like what people think is like, oh, the acquisition. He's very serious about that. He wants it to go through. And maybe. But I think what was more despicable actually was what Michael Burry did, where he wrote a long article on why it makes sense. Now, in that article, he was not uniformly bullish. He did mention and even said that he might sell some shares. But deep into yesterday, he was pumping GameStop, and then he sold all of it. So he was just looking for a cleaner exit. That, I think, is despicable. But regardless, there's two other possible alternatives here. So one is, as this guy, I don't know him, but I think you maybe share this with me. GameStop is not actually buying eBay. eBay will turn down the offer. I think that's the most likely scenario. But GameStop holds 22 million shares of eBay in call options. So this is actually leverage. And oftentimes, and we saw it yesterday, eBay move up positively. It retraced some today. When there is a rumor of a takeover, a buyout, what have you, then the stock actually moves up substantially. So it could be just as simple as that, which, I mean, it's kind of sketchy or despicable. It could be that he's trying to bid up this as well so that maybe Shopify or somebody else steps in and buys. Because oftentimes when there's blood in the water, the companies are like piranhas and they will chomp any chance that they can get. And the other possibility, which I think is even more straightforward, I think this was probably like written up by AI, but this part is accurate. That part of Ryan Cohen's pay package is, I think most, if not all of it, is performance-based, which is great. But the problem is when you use a measure that can be pretty easy manipulated. So here, the tranches are based on market cap plus cumulative EBITDA hurdle. Now, the way that you can kind of circumvent this is you relentlessly dilute shareholders to do a major acquisition, and all of a sudden you're looking at a combined market cap that is higher than where you were, and you bought a business that is generating positive EBITDA, and as a result, you cross that hurdle as well. You didn't have to do anything that actually improves shareholders of GameStop's position. You just made it so that you can hit these tranches. And so it's hard to say as far as what the motives are. Is it just free publicity? Is it a sincere takeover? Is it him trying to get his pay package? Is it just running up the shares price on eBay and then exiting and saying, well, these guys won't work with us, forget it, which I actually think maybe it's more this than anything, just based on the TBPN interview that came out today. What are your thoughts on that, Tevis? What do you think the goal is, the actual goal? Is it a combination? Is it something else?
I think it's absolutely moronic. Like, so think of it from the perspective of you're an investor in GameStop. Let's just say you have $100 in GameStop, all right? I understand you might have a little bit lower IQ than the rest of the population, but even if you think logically, I'll say it slow for the people in the back of the class. Like, if you have somebody who, quote unquote, has a fiduciary duty to be a steward of your investment, place that heavy of a bet on call options as a publicity stunt so that they can get their own pay package, I'm sorry to break it to you, they don't have your best interests at heart. They're gambling. And if, in fact, this is his master plan to bid eBay up and then the call options pay out disproportionately and all of a sudden they magically get the money, I still would want to exit that as fast as I possibly can because the trust is completely eroded. And again, back to my original point, how the hell is GameStop not down way more?
It was down a lot yesterday, double digits. So yeah, we'll have to see how it plays out. You know, a lot of it is people. There's several different reasons why people hold GameStop. There are some like Burry who I think held it mostly because it is a deep value play. If you look at it like as far as valuation, content, cash, and everything, there's a lot that they could do with that business. Cohen has trimmed a lot of the fat, which he did talk about a lot as far as eBay. And I know from experience because I ran a business primarily off of eBay for more than a decade that we did quite well. There's a lot of fat there to trim, a lot of improvement that could be had. So, like, if this actually ended up working out, I think that eBay would be better off for it. And there are some synergies between GameStop and eBay. But yeah, bottom line is, I don't see any way that this package or this bid actually goes through, and I'm very curious what happens from here. Like people were asking, it's like, are you going to buy Etsy? Are you going to buy whatever? I don't think there's going to be any other offers.
Read this. Is it even legal to put options before you make an offer? Like that is something that the SEC should be all over, man.
It's pretty sketchy, and I personally like. All jokes aside, like I don't begrudge anybody for investing in GameStop. I made a lot of money on AMC back in the day in 2021, and got out because I'm like, hey, this is not going to $1 billion a share or whatever people were quoting at that point. So, you know, if you make money, you make money. I'm happy for you. But I got to trust leadership and management and understand what the vision is happening. And there's so many moving pieces. I'm like, is he looking after his own best interests only? Or shareholders, or a short-term bump, or what is exactly happening here?
Yeah,
and I just think that there's better opportunities. Now, that doesn't mean that I'm always right. I might not be, but I would be pretty surprised if this goes through, and I'd also be pretty surprised if there's a meaningful acquisition that is behind this as well.
Yeah, I mean, maybe they have other money backing them. Who knows? Honestly, like we live in a reality TV show. I don't have a horse in the race. I don't own GameStop. I don't want to own GameStop. I just get pissed off when people start breaking their fiduciary duties and start taking advantage of, you know, shareholders that are maybe less financially literate or savvy as they are. And by the way, like the dude's already a multi-billionaire. Like, why do you have to be such a big grifter at this point? Like, what, to get more billions to add on your stack of billions? Like, it's just so dumb, man.
Yeah. It's really funny though. I mean, like, GameStop has a very passionate community still, and seeing that go from Burry is a god to we hate Burry and he is scum, and it's so funny. Just like. I don't think he realized what he did when he sold, and also mentioned it as well. So I mean, look, apes. I was one of the apes back then.
You can absolutely treat Ryan Cohen as a god, and I won't get in the middle of that, right? I don't want the retail Wall Street bets army, mad at me. I don't give a shit. Treat him as a god all you want, but when he makes out like a bandit with your money and leaves you guys high and dry, don't come running to me.
Yeah, that's my bigger concern is I don't see this as being beneficial at all for shareholders and retail investors. And so whenever I see something like that, whether it's a Chamath spec that he's putting out there, which, hey, maybe it'll work out, maybe not. But I'm like, you guys need to be aware of who Chamath is and what happened in 2021. And yeah, we got SoFi as a positive example, but there's a lot of negative examples. So I'll do that every single time, and that doesn't mean I'm always right. But yeah, make sure you do your due diligence, that you think through. It's not because people hate GameStop or hate retail that they are signaling an alarm. And I think that's with CNBC, that they were just like in disbelief how someone could come on there and just be like, oh, it's on the website. Speaking of website, no, just kidding. So, Any more on GameStop? Otherwise, I'd love to talk about my book, Palantir.
Yes. Talk about your book.
All right. Let me put the
I
note in
haven't seen
here.
any of the number. I saw 85%, and that's pretty much it. I don't know nothing about nothing. But he said
Okay. Yeah.
100% next year. I saw Amit's reaction. That's pretty much it.
Yes. Oh, yeah. I need to pull that up too. Yeah. Let me do that first. So Amit covered this live, and it was the greatest thing. This right here landed before the actual earnings. So Carp said, I'm planning to grow sales 100% next year, which they don't want to talk about. And we're dealing with fewer people. We're doing it with less people. In case you didn't know what fewer meant. We have more free cash flow this year than revenue last year. Amit's reaction is exactly the same as my reaction. Sells at 100%. Now, when I posted this, it did get a lot of traction, but people were like, well, that means that if I start a business and we do $1 in sales and the next year $2, you're going to give me whatever. It's like, okay, the base of this, of what's happening with Palantir, is not $1. Now, it is down 19.5% year to date. It's down a little bit this week, and it's even down a little bit since earnings. And a lot of it has to do with the multiple. But if we look at, let me actually just bring up the slide deck instead, and then we'll just look at a couple of things. And then real quick on, so this is one of my favorite slides. Ooh, it's hard to see it. No. All right. So this is a rule of 40, top 100 market cap. And so Palantir sits here. I know it's impossible to see at 145%. This is NVIDIA, right around the same range. Of course, the memory brothers, Micron and SK Hynix, are way higher, and they continue to go up tremendously. And if we look at like the individual drivers, U.S. commercial is growing at a ridiculous rate. I mean, that's just filthy. 18%. A lot of companies would be happy within a year. That's quarter over quarter. 133% year over year. Let me actually pull up the fiscal AI numbers because it's going to be easier to look at some of these things. So let's do revenues.
You really are
revenue change. And let's do this on a quarterly. All right. So can you see this okay?
Yeah, you're good.
All right. So this yellow line right here is revenue growth. It's not one segment. It's not part of the revenue growth. It's all of it. 85% revenue growth. There were, I think, analyst projections were around 74, 75% going into this. I thought that they could get a little bit under this, but in the 80s, $1.6 billion, which is just absolutely insane. And what's even crazier is if we actually add in the net. So, oh, I lost it. Net income. There we go. Consolidated income. There. Perfect. So the consolidated net income, Tevis, $876 million, is higher, or actually about as high, rather, as the total revenue last year.
Yeah.
That is insane. And the way that they are able to do this, like I'll show you some KPIs real quick, and then we'll talk about just a couple other things. So government commercial growing just equally as well, just ridiculously. International, of course, is the laggard. It's doing okay-ish, but compared to the rest, it's absolutely terrible. Billings, short and long-term RPOs took another step forward. This right here is the main thing that's driving this. This is net dollar retention. I know it's probably harder to see the number, but it started down here at 107%. It's all the way up to 150%. As a reminder, this is for our software as a service business. It's a business to business. Sometimes it's called net revenue retention instead of not dollar. Palantir's spin on it is they don't count customers if they've been a customer for less than 12 years. And in terms of reaccelerating, so if someone comes in 6 months later, they want to re-up their contract, that doesn't count towards this measure. So instead, this is measuring existing clients that have been with Palantir for a year and what the contracts look like a year later. In other words, if they had 0 new customers, they would have still grown their revenue 50% year over year, which is insane. Now, the last thing I want to show is the actual margins, which usually for a business to accelerate like this, you're either very, very small or you're hemorrhaging money, which they're clearly not, or perhaps you've done a big merger and acquisition, and so you're growing inorganically. It's not Palantir. Or what you're doing is you're actually offsetting margins. So let's do gross margins. And let's also do operating margins. Oh, it's over here. operating margin, and then we'll do free cash flow margin. And I'll just break these down this way, and you won't be able to see the numbers. I know in this view, well, maybe a little bit. So this is a gross profit margin, and let's go back a little bit just so you can see where they've come from, which is like ridiculous. Anytime you get above 80%, which is this level right here, I think you're in very good standing. Now, it does depend on your business, but like Hims, famously has been in the 80% for most of the time. That's a great thing, but it's gross. It's not net. Net usually improves if you're able to do cost control, and as you become more and more profitable, it's a natural function. 46.2% is very, very good. Of course, they were in the negatives when they weren't profitable, but it looks like that there's more meat on those bones. And then you have the free cash flow margin as well that tells a similar story, that no matter which of these, and there's other measures as well as far as margin that you look at, they are not growing because they're saying, hey, let's cut our margin to the bone and let's just take market share. Instead, what this is demonstrating is pricing, that they have price pressure, that basically they can charge what they want just because people say, hey, we need Palantir. There's no ifs, ands, and buts about it. Now, there's one other thing that I want to mention on Salesforce and CRM. We could also talk about cash, but first, Tevis, I guess, what's your initial thoughts to this, just what I showcased, or is there any questions or concerns or?
Yeah, I mean, super bullish. I don't know how they're going to go 100% next year on these comparables, but let's see it, I guess. I mean, yeah, the growth rate can't just keep going up.
Yeah.
So I'm just waiting for, when is it going to stabilize? That could take a while, but we'll see.
Yeah, and like if you had asked me before yesterday, it's like, are they going to grow over an entire year next year at 100%, assuming that the numbers for this year are very good? That makes it come a lot harder. I would say no. I'd say, they could probably do 60% growth. It'll be a very good year and everything, but, it's the law of large numbers is starting to come into play. That's, Carp is just saying that that's the goal, but they're doing it through a variety of means. And what's really impressive, too, is a lot of people cite Palantir as being egregious for stock-based compensation, and it has been that in the past. Certainly when they did a DPO, and then last January when they had a lot of RSUs and PSUs come just for regular employees that made a whole bunch of people millionaires overnight. Congrats to them. But the stock-based compensation now is a little bit over, like the total share count has increased by a little over 1% from last year. I'll take that any day for a company that's growing 85% year over year. Now, where the rest of this is coming from, I think partly it's because of conversation with existing customers and then that dollar retention. I think part of it is Carp talks about not being able to keep up with demand, which is a little bit frustrating at this point because he's been saying it for 2 years. And it's like, hey, quit saying that. Figure out a way to capture more demand. No, I'm not saying 85% is bad, but like, quit saying that as a selling point. Like, you've had 2 years, figure it out. But part of the solution that they do after that is AI FDE. That's the forward deployed engineer that they have as an AI product specifically to help scale that side of what they do. But it seems like that alone is not enough. So I'd like to see them capture that forward demand. Maybe there's a plan in place. We sure didn't hear it. And that's one of 2 spots I didn't actually like on the earnings call. But one that I thought was really interesting, we've talked about this with Steve, and this was maybe a few months ago, where we mentioned the impact of AI on enterprise resource planning software, ERP, and how they could impact CRM. What's interesting here, Benioff took some shots at Palantir last fall, and it seems like maybe they noticed, because this is basically the right-hand guy of Alex Karp. Shyam Sankar said, this quarter, we replaced our old expensive CRM. You love the description. It's not just we replaced CRM, but it's old and expensive, guys. Like, they know what they're doing here. This is one of those rivalry things. With an AI-first solution built on AIP in a few months that users absolutely love. And then there's one other comment on this as well. In the commercial world, people are replacing legacy software at a lightning-fast pace. As I mentioned in my remarks, we'll see that even internally in Palantir, where we've gotten rid of legacy software like CRM, built it very quickly on top of our platform to a user experience that our users love. And of course, the market caught on that, and After Hours did not treat CRM very kindly yesterday. I didn't see how it performed today. I've talked about it for a while, that Palantir absolutely can make inroads into ERP. I don't think that they'll do it as far as just out-of-the-box type of solution. But regardless, I mean, it's hard to look at Palantir other than that valuation and be like, oh, I'm really bearish on this. It's ridiculous. So 85% year over year. Let's assume, Tevis, that they will grow 100% year over year while improving margins because they're not going in the opposite direction. Maintaining stock-based compensation under 2%. It's probably going to be a little bit above 1% that where it's at right now. And breaking into new TAMs, including ERP. Where would you be interested in buying Palantir?
What's it at?
It's 135.
It's not that bad.
Yeah, I sold some cash security. Mm-hmm. Well, yeah, it's a massive market cap, and you compare it to other companies that are the same market cap, and it's like, well, they don't generate nearly the amount of money. But I think the market, I don't know, at $200, obviously, 9 months ago, that was way ahead of itself. Stock is still probably a little bit ahead of itself. I'm not going to say it's inexpensive or cheap here. You can look at a couple of things. Yes. $100 a share is when I think I'd just go ahead and buy the position that I want to have.
You say this every single week. You're like, insert price here is like where I'd go all in. I'm like, dude.
No, I didn't say all in.
Just go all in already. I want to see.
I've said $100. No. Like, there's a price that's too much to pay. And the reality is, Palantir is down, not because they missed anything. They didn't. It's not because the numbers were bad. It's not because the guidance is bad. This is Rosie. It's not because the mode is weak. It's simple. Well, it's two reasons. One is it's caught in the SaaS bucket, and I think that's an overhang right now. It's weighing on Microsoft of all things. But the other is evaluation. It is not cheap at all, and it's also not. They're not manufacturing memory, so who cares?
Yeah, and I think they're gonna do fine. But like, if the stock is choppy between, let's say, 200 and 100 for the next year, then it's like, all right, we can talk at a more reasonable valuation because they've already grown 100, they've expanded their margins, they've expanded, their total addressable market, and the prices stayed the same,
Yeah, honestly, like if we're range bound for like the next 9 to 12 months and they continue doing this, at that point, I'm going to stop saying that the stock is expensive. It will look like that for some people that are just ignoring the growth. But frankly, if you're ignoring the growth of a company, I guess there are some companies where it doesn't really matter, but that's just a weird style of investing. Even value investors don't just completely ignore the growth.
So
I never made
Thomas says, put some respect on Mr. Air. He's never made a single bad investing decision. And I thought that was a perfect
never
time.
made any.
Yeah, well, I thought that was a perfect time for us to talk about PayPal earnings, which were just earlier this week. Roy, what do you think about those?
Yeah. Before we do, I saw the super chat. Did you want to acknowledge that one?
Let's throw that up. Thank you so much, Sebs, for the $5.
Thanks,
think
man.
Cerebrus IPO is going to be absolutely nuts next week. Any thoughts or interest?
I saw this briefly, but I've not really looked at this. I don't even remember what they did. It's an AI chip maker, Cerebrus, so I know nothing about them. The one thing that I'll say is with IPOs, usually if you want a long-term position, it makes more sense to wait 3 to 6 months. But, if you get allocated shares, oftentimes you can exit, after the first month and not be set in the penalty box and you'll be fine. So, Matthew Johnson, I saw that. Yeah, I didn't pay $100 to move the hat.
He did $100 to move the hat just in his brokerage account, unfortunately.
Yeah, exactly. So yeah, I don't want to talk too much PayPal, but I do want to hit a little bit of it because it's pretty interesting too. Like there's been the reverse of kind of the GameStop situation with eBay, where the new CEO Enrico Lourdes has talked about. I think I butchered his first name, and I apologize. Has talked about
Did
What's
your
that?
brother land on his feet? Where's he at now? Do we know?
There's been no announcement or anything, so I'm thinking he hasn't yet established a position. Like, the one thing I'll say about Alex is people, for the most part, like, they only knew about him and followed him, and I include myself in this, once he came on or was announced as a PayPal CEO. But he's a SaaS guy all the way. He started at Intuit. He was there for like 20 years. He ran half the business, a small and mid-sized business unit. And with what's happening with SaaS and the SaaS apocalypse, I think that there's going to be a lot of retiring that happens in the field, and that'll lead to a lot of vacancy. And some of these companies won't want to be like PayPal, where they're just like, hey, we don't care actually about innovation or growth at all. I think that they don't just want to survive, but they want to actually thrive and make a pivot. And Alex is a great idea guy, but he needs to be given enough time and enough free reins. So yeah, PayPal is different. So the new CEO, by the way, was on the board, and I think my guess, and I have no special insight on this, but my guess is the board and Alex did not see eye to eye, and Lourdes was hired as the guy that was like, no, this is what the plan is. We're to go away from all this silly innovation and growth stuff, agentic commerce, who cares about that, stablecoin, who cares about that, advertising, we'll kind of let that one roll. They ended up actually firing a couple of the EVP heads that Alex had brought on, Diego Scotti and Michelle Gill. And I think that then they've talked about this selling PayPal, maybe to Stripe. That was a rumor from a couple of months ago. But also more recently, I think it was 2 weeks ago, they said that they were going to establish Venmo as a standalone business entity within PayPal. Now, some have said, no, that's not for anything particular. They're just doing it because of reasons. The only reason that I can find to actually do that is if you want to float it for an acquisition, that somebody else can buy Venmo. Now, the problem for PayPal is that's the fastest growing asset that they have. Yeah, the details are on your website, I'm assuming, Thomas.
Yeah, maybe GME will buy them.
Honestly, it would not be
Don't give him ideas,
completely
bro.
stupid. It would not be completely stupid, and it'd actually be kind of feasible if that was to happen.
GameStop buying PayPal?
PayPal buying eBay.
Oh,
I'm kind of messing with you, actually. But, no, PayPal actually came out of eBay and became a public company. It would be funny if it went all the way back. But, I mean, I don't know. Who knows? Like, that would be actually kind of hilarious if Ryan Cohen floated that afterwards of like, hey, let's do PayPal now.
you're going to give me an aneurysm. I hope you know this. Like, stop
Just
cursing.
wait until he talks about buying SoFi.
It's like, get that fucking leather jacket off. You're not Jensen. You don't wear that.
I mean, they could buy it with just cash. It's reasonable, They got the name recognition and the scale and SoFi GME. I don't know. SoFi Stop or Game SoFi? GameFi. We got it right there. That's a clip.
Game.
Yes, I'm marking that down. You can use that one for free, Tevis. So Ryan Cohen. If you need to hire somebody to really think through and prepare you for the interview, just slightly better than that CNBC one. Tevis, I'm volunteering. Like, he's game for the low fee of half stock and half cash. It's on the website. But yeah, as far as PayPal, like, earnings were okay-ish. The guidance for the next quarter, it's weak year over year. I don't really care about these things. Like, basically, what I think is happening is they don't care about growth. It's just value. If they do find the right buyer for Venmo, like, let's say that they sell it for $20 billion, that's immediately accretive just because of the valuation of PayPal at present. But you're also selling your fastest growing asset, one that was well integrated into the ecosystem. You're instead breaking it apart. And so on the earnings call, the reason why I think that PayPal initially tanked there, and I didn't keep up with it in the day, because it's like scanning Facebook on an ex-girlfriend. You don't do that. But why I think it tanked is the CEO seemed to indicate like, no, we're planning to continue to use and operate with Venmo. We're not really planning to sell it. And so it's sending mixed signals. A lot of what he said was just rehash of previous quarters. Nothing has really changed. The same CFO that everybody doesn't really like is still there. So yeah, it was It was not an amazing earnings. It's clear that PayPal has some issues as far as growth in the future. All the cost-cutting stuff is not nearly enough. And if they're going to sell their fastest growing asset, they better get a ridiculous premium for it. And I don't know that they will.
I think they can, but who knows? Who knows, Roy? But I mean, they beat their numbers. Their numbers looked good.
Well, yeah, and the stock initially was up a little bit, and then it fell. And
did it sell off again?
Yeah,
in the morning.
Yeah, I don't know where it ended. Yes, it recovered a little bit,
8%.
But like, to be fair, PayPal, the stock has never needed an excuse to sell off. It just, that's what it does.
Yeah, dude, I woke up and I saw this thing at like $50 or so, and I was like, oh, cool. And I thought, the first thought that came into my mind was like, oh, if Roy was still covering this, he would have been awake to, live stream this. And then I just went about my day. I got dressed, went in a shower, got ready for work, and I didn't think about PayPal again until just now. And I see it's down 8%. It's like such a dog of a stock.
Yeah, I can think, A, that it is undervalued, and I do think that, and B, that it's also going to be an opportunity cost. Both can be true.
Thomas is on fire today, man.
Yeah, he is.
Thomas is thinks he's funny or something. All right, what's next? Oh, we got to talk about SoFi.
Yeah.
So, yeah, we chatted with the IR team. Roy hasn't made a video about that yet. Have you?
No, not yet. It was tough because that's when PLTR earnings hit, and then I had a super late meeting, so I didn't get home until like 8 o'clock at night. So like I didn't even make any content at all. So I might do that. I'll probably do that for tomorrow. And I also have a SoFi article that's coming up pretty soon too. So, but yeah, what was your takeaway, if there was just one or two things from that for you?
I like that they're talking to us more, and I think this is going to be the start of much more regular communications. Hopefully, every earnings we can have. I'm not asking for something like what Robinhood has, like to that extent, but if we can aggregate, like even at the end where we're like, oh, I said when we were wrapping up, I said, oh, I don't want to take up too much more of your time, and they're like, no, we're happy to answer all your questions. And I was like, oh, I didn't even like prepare that many questions because I thought I only had like 15 minutes kind of thing. So the sentiment was very much positive and collaborative, that they want to keep the dialogue open and ongoing, which to me is bullish, because like you just need to sort of, slide the door open just a little bit. One interview, a couple of questions after earnings. And then once they figure out that the water is warm, then it's like you're going to get a full blown investor day, within 12 months. So really love that this is the direction they're going in 2026. And I think, they have a very passionate community behind them, and maybe passionate. It cuts both ways, because that same community is a little bit toxic, let's say, at $16. I don't blame them, quite frankly, because the stock has moved in the opposite direction. But, one thing the IR team said to us was the sentiment inside the company around the business direction and the opportunities they have ahead in no way whatsoever reflects the stock price. The stock price just does what it does, and they're still keeping very much on their mission. So,
I'll do a video on it with the questions that I asked and the answers I got, but I'll just give like one thing that you may not like. A lot of people might not think like this is important, but it really is. That let me take one step back. My first interaction with any IR team, beyond just sending in a question as a normal shareholder, was with Robinhood. Yeah. And what made me very comfortable there is two things. One is there was no question that I could ask. Like there's some questions that they can't answer because it's Like, what's your current EPS based on like material non-public thing, or what's your next acquisition? Like, you can't do that, and they would shut it down. But in that interview that I had with Vlad, same thing with PayPal actually as well. There was no question off limits. Like, I could have brought up the GameStop stuff if I wanted to, but that's old history. I want to focus on the future. With Alex Chris at PayPal, same thing. With this, it's not CEO level, but it is. I mean, I don't think that they're like unaware of what's happening at all. This is an intentional strategy. And I think that they realized, and part of the solution was hiring data-driven investing, but they realized that the communication has not been good enough. And that's been a major criticism of mine. Second, I've been pretty critical of SoFi on a number of places. You have two, Tanner has two. I've been the most critical, I think, out of the three of us. Steve, probably more so. But, that previously you guys had the interview with Anthony. I'm like, well, they could just say, what, these guys cover SoFi better. They've followed SoFi for longer. Plus, they're not as negative as Roy, who's a bear. But they didn't do that. They invited me. And then the other is, right off the bat, they let us know, of course, no material, non-public information can be shared, which is great because we can just share all that conversation freely without, causing concern. We don't have to say, I'm not going to buy or sell SoFi or what, like none of that stuff. And second, like, they legitimately meant it. Every single question that we asked was answered in detail and thoroughly. It wasn't any of the, well, it's on the website, half cash, half stocks type of stuff. It's very concrete, and like some of the stuff, like, well, I asked questions because I didn't know like the full answer. You can put the pieces together, but I wanted something a little bit more direct, and they were very direct. It wasn't, and that, like, if it was the opposite way around, Tevis, where maybe they invited me, but kind of dodging questions and like, hey, we want you to really ask about this, I would have come away from that with like, man, this is a company that is maybe in trouble. There's obviously something that they're trying to guard and protect that they don't want out. They're wanting to shape the narrative in a certain way. Not the case at all. So it instilled me with a lot more confidence as far as like, it's just a small slice and glimpse. But as far as like what the company thinks about themselves and the opportunity that's there, it's not just Anthony Ngo at the top that sees it as an opportunity. So,
yeah, and at the end of the day, as many shares as we might have, a lot of the people working there have way more. And so if you think that, the world is doing you an injustice because your 75 shares have not appreciated, like, trust me, people who have been working there for years and years have their entire life, like, this changes their life kind of thing. And so, I think people need to understand that. And I'm not happy about how the stock has behaved. I get it. I think the thing that Roy and I and Tanner and a bunch of the rest of us who are in early can rest on is the fact that, like, I was buying at, $6, $7, $8 kind of thing. And so it's just like, I'm still up double on my position, despite us being down 50%. So I'm like pretty chill about it. But at the same time, like, I get if somebody bought at 30 and went in big and then now they're at 15 and they're like, I hate this stock. Like, I get that. I think it's only a matter of time before it reaches 30 again. They're doing all the right things. The market is, playing with their shiny new toy right now, which is AI. But eventually they're going to, certain sectors are going to get re-rated. Certain companies are going to get re-rated. And that always happens. Whether it happens in a month, a quarter, a year, or a couple of years, it's another question. But SoFi has, I think, many multiples to go in terms of their compounding of their stock. It's just a matter of time.
Yeah, I'm just waiting for them to divest from the silly bank business and just go full port AI. It's SoFi AI instead of what they've been doing before. And honestly, like, that's just a sheer winner because we've seen, like, if a shoe company can do this, come on. I'm just kidding. But no, like, exactly what you said. It's a question of, I don't think if, but when. The earnings speak for themselves. I know that people hate the stock price action, and I don't like it either. Like, it's frustrating. Yeah. I get it. But I've seen this so many times before. When a business is going in the right direction and growing in that right direction as well, it's easy to just say, you know what? It may take a few quarters. It may take even a couple of years, but I think there's materially higher upside. And so I'll continue to hold. And if it goes down lower and there's an opportunity, I'm going to load up on some leaps.
Yeah. Yeah,
Thanks, Tevis. Thanks.
exactly. Well,
And AMD is to the moon. Really good earnings. I don't know if you saw any of the earnings results at all. The biggest thing on AMD, I'm not a shareholder. I've not gone through that earnings with fine tooth comb, and I'm not going to. I've always liked AMD. I've just not liked it necessarily as an investment. Kind of wish I did, because that would have worked out very nicely. But they're actually taking a bit of market share as well in the data center space, which any company that's of that size, that's run that well by Lisa Su, that begins to take some market share. It doesn't mean they're going to take all of it. Doesn't mean it's going to do like the OpenAI to Anthropic type of shift. But I mean, that's very good for AMD, and there's a reason why the market not only has been willing to give them a premium over this year, but actually went up tremendously. And we've seen the opposite so many times this earnings season, where it's a great company that's not even mispriced. Palantir, I'd say, is a little bit pricey, but they go into earnings and it sells off anyway. Duolingo is one of those. Of course, it's in the SaaS space, but yeah, so good on AMD shareholders, and congrats. But you need to finish that puzzle so we can finally break out. What you been doing?
Working, man. People are commenting how cranky I am in this on this stream, and it's just like, guys, I've been in back-to-back meetings since 8:30 this morning. I am freaking dead. Like, I am so exhausted, and I got more work after this.
Yeah,
Trying to afford the lifestyle of that family that I have, Roy.
Are you going to offer them half stock and half cash?
Yes, exactly. Half stock,
Good.
half cash. All right, man. Shall we do some Q&A, or are we
No.
thinking something else?
No, we're not going to do that right now. Instead, you owe us a table pounding or chest pounding moment with Nebius being at an all-time high.
Oh, yeah.
So go for it.
I mean, I'm not that happy about it. I have covered calls, so I kind of want them to just they were red this morning, and I was just like, yes. But they finished flat, so not super excited about that. Especially because they're going into earnings on the 13th, and I think they're going to smoke their numbers. So we'll see, man. And we can see Nebius. Like, here's the thing that I'm nervous about with Nebius with covered calls is that they popped from like 150 to 180 on basically nothing, on like some Anthropic 44 billion ARR news. Imagine now that they're partnering with Anthropic, or they're partnering with Amazon or Google or whatever. Because like we have Iron and CoreWeave reporting on Thursday. I'm sure Nebius is going to react to those, right? And then imagine earnings next week. Like, there's so many green shoots to take this thing over 200 over the next week or so that it makes me really nervous. At the same time, all I really need is like one good red day. One day when we're like down, because like they're 2-week calls. They're for the May 15th, right? And so I can get out of them pretty easily. I just need one red day. So it's just like, Trump, do something or something. That sounds horrible.
Trump, start World War III. Yay, my portfolio is saved. No,
yeah, I saved a couple hundred.
I know you're not saying that.
Yeah. But I think they're in a really good position. I mean, right here, like new all-time highs for Nebius. They're doing tremendous. Even today, I mean, they went up to 179.96. So again, broke new all-time highs even today. 200 is coming very shortly. It's like 10% away, bro. It's not even that much. 10-15% away. They're going to do very well, man. And like, people have been so skeptical, but at the end of the day, this is a company that's executing, and the market is rewarding them for it. Why? Because they're in the right sector.
Yeah, and it's one that's positioned incredibly well. Iron also, it's not gotten the premium of Nebius. And frankly, I think Nebius is the better company with the better strategy. But that doesn't mean Iron stinks. I think, if I had to pick between that and CoreWeave, I'd pick Iron. They're making their NeoCloud play a little bit more credible. Nebius has done a lot of work on this. I think they're substantially further ahead. And I think that's where their product actually becomes more sticky and differentiated. This is long term, not short term, and that essentially it's other value added services on top of the steel or the I lost it. The Bear data center. I can't think of the word term, man. Getting old, man. But yeah, regardless, they acquired Morantis. The market was very excited about this.
I wasn't even listening.
Bare metal. That's what it is. So what CoreWeave strategy has been doing. IREN is mostly bare metal, a little bit neo cloud. NBIS is certainly trying to do the neo cloud approach as well. So not just providing compute. So they are working on building out these capabilities. There's a lot of information on there. There's a lot of IREN bulls that did a great job of breaking it down. What I found that interesting, and I'm not an IREN, you're not either. This is one of those times where it's nice that one of these other data center plays is actually pumping NBIS. I think that's why we ran today. But the real reason, Tevis, it's because you sold the covered calls. It was guaranteed. I mean, that's just if you're going to develop a strategy for the market, you need to have actually a subscription where all you do, you don't even share your positions, your shares, whatever. You just share your strikes and your dates on positions, and that is like all the alpha that you need. Just to, not financial advice, but.
You know what? Like, for me, if I get half of my NBIS position called away, first of all, I'm going to try to roll it out, right? Because you have so much premium in the form of time value that I can probably roll out fairly painlessly with a net credit. But even if, let's say, I wasn't able to do that and I get half my shares called away, that wouldn't even need the worst thing in the world. I'd be up over 100%. And at that point, I would just be playing with house money.
Yeah.
All my margin would be gone. It wouldn't be. See, like, I have better options than Nate does. He said he rolled out to June $220 for a credit. I have May 15th, 2 10s and 2 15s. I'm fine, baby. But at the same time, if this thing pops off on May 13th after earnings, I'm not fine. But we'll see what happens.
I'm also hopeful for a retracement. I can't remember where I rolled mine last. I think it's 160s, so it's much lower than where we're at and much lower than where you guys are. But my cost average is probably lower too. So maybe not the Nate's. Nate did add though. So and by the way, cost average, not the most important thing, especially in a bull market. A lot of times you'd be like, hey, look at my great cost average on Micron, but you're really kicking yourself because you didn't buy more at 300. So, yeah. Let's, with that, go ahead and pivot. I see a lot of really interesting questions in the Q&A period, so let's start hitting those.
Yes, let us start hitting those. Let me just bookmark the last couple. All right, if you guys want to ask questions, feel free to do so. We got 21 questions bookmarked for you. Really appreciate all of you being here, over 300 of you on YouTube, and then I don't even trust the X numbers, quite frankly.
No, they're not real.
Yeah, exactly. Yeah, exactly, dude. Meta, don't get me started, all right? You're gonna hear another freaking rant from me, because Meta was doing so well, and I felt like such a baller for buying on margin 100 shares at 590 in after hours, and I was just like, "This is I'm a genius," because it went to 680, and now it's still at freaking 600.
You got zucked.
I got zucked. Yeah, yeah, exactly. I got zucked. All right. Tommy Jerry says, I sold covered calls on AMD expiring this Friday at 390, but AMD after hours has exploded. Let's take a look. AMD after hours is 414, up 16.5%. Tommy Jerry says, what do I do without having my shares called away? Need the degen. I think he's referring to me. Okay, they're expiring this Friday at 390. I don't know what you got paid for them, but I would imagine, I don't even know what, let me take a look at the AMD option chain, because I want to see like how much premium you would even get with AMD on the time value alone. Like, I'm curious to see what that would be. I'm sure you could move them out a month or so. Yeah, I mean, it's pretty good. I mean, what, like, you can sell uh you can sell 500s for $3.60 on June 18th. That's wild. That's like what's that, Roy? Like 6%?
Yeah, it's awesome. And not even into earnings.
And
Now
not
they just had. I don't know that the IV is fully out of that from this earnings. I don't think that it actually is. So
probably not.
you'll
But
need.
like, it's going to be better because it's going to open at 4:14 tomorrow, so you could probably get more off that.
That's true.
Yeah,
Yeah,
I mean,
it's going to change a lot though between what we're seeing right now and tomorrow morning. So just be aware of that, Tommy.
yeah. I would see if this thing. I don't know. You should probably roll it out because what you don't want is you don't want to get early assigned and lose your shares anyway. So in the morning, roll it out. Try to look for a month out and see what gives you a net credit. Maybe you might find that you only get a net credit for like 415s or 410s or something up from 390. And then try 2 months out and see if it gets any better.
And let me give one tip as well for rolling. You of course need to figure out like what the goal is there. Is it to make more on your way out? Is it to get out of that contract and keep your shares? Is it to you're going to pay any price to do that? Or you wanted to stay even? But usually what you'll want to do is target monthlies. And monthlies are going to be the third Friday of every month. Now, there are some tickers that have a very light option chain, and all they have is quarterlies, or maybe they'll go one step further and have monthlies, not even weeklies. But even on established option chains, you're going to see more liquidity on those monthly strikes. And so if you're not seeing what you need for the next week or two, then look for the third Friday of, you can even look at in May to see if that's attractive, or maybe June. And then you're going to see, okay, what's the actual premium there? Now, most brokerages these days have pretty good tools. Robinhood has a great one, but Webull's isn't bad either, where you can actually see exactly where this is likely to land, and then you can put in your limit order on the roll side. And all that means is between getting out of the one contract and buying the other, that's what you're looking at it as either a credit or debit. But if you're just looking to kind of break even and roll them further out and further up, if you're not finding what you like, then look for the third Friday for their options chain. And then just look for one that has that tighter spread. You'll find it.
Yeah. And as always, please don't sue us. This is not financial advice. This is just what we do. If you ask for our advice and we give it to you and you sue us, I will be so disappointed, dude. I'm never answering a Q&A ever again.
That's true. Yeah.
All right. Mark Anderson asks, SoFi leaps at present levels.
Yeah, I'm not buying them, but it's because my position for SoFi is very large. But there is a price that I'm comfortable with. It would need to go down more, both on Robinhood and SoFi, where I would load up on leaps. But we're not there yet. When I do leaps, I go as far out as I can, as far as time, and pretty conservative strikes. So if I were going to do leaps, I would have to like look at a lot of variables, but I wouldn't target anything. Like if I'm looking out at like January 2028, and we're not quite at the point where January 2029s are available, but I'd probably wait until maybe August when those are available. Target January 2029s and look at maybe like $25 a share, and you're going to be paying a lot of theta premium on that just because it's so far out. But I would rather do that than get a little bit better price and go up to like $45 a share or something like that. I'd rather be a little more conservative on those because it's basically just a form of leverage. You can also do vertical spreads as an option when you think that is going to be very volatile, and tactically either close out one leg or the other, or just hold them out and let theta decay do its work. And if you don't know what I'm talking about, then don't do it.
Yeah, I honestly, man, I think if you're bullish on SoFi and if you would, think it's going to go up and the trajectory seems bright, like the risk reward is way better here than it's been in the last 6 months, let's say. So, like I bought Leaps a few weeks ago, maybe a month ago or so now, and it was at $16 or so. Like those Leaps were up because it went to $18 to $19, and now they're down again. it's not that big of a deal because they're like 2028 leaps. So like I don't really care. I lost maybe a month of time value, but yeah, I'll take the other side of that. I think if you're going to buy them anyways, then you might as well buy them here, unless you think SoFi is going to fall into like $10 or $11 range. But if you want to play the middle ground, then just buy a couple and then keep some dry powder on the side and add more if it falls more.
Ori,
it
thank
depends
you.
on where you're buying them, like what strike. If you're talking about like $35 leaps, then it's like, all right, good luck. But if you're talking about like $15 leaps, it's a whole different story.
Yes. Can you throw up Ori's since it's a donation? Hi, Roy Tevis. I analyze Palantir's report from every angle. Today's drop is mainly about the slight miss in U.S. commercial. I heard that as well. Okay, yeah, he's coming back. I that's not something that I caught last night, nor did I catch it in time for the video. So I need to look into that. They don't guide on U.S. commercial, and I didn't see an analyst breakdown on U.S. commercial. So I'm kind of curious on that, Ori. Maybe you know this, but I'm definitely going to look into it. How many analysts actually are guiding just for that segment? It can't be very many. And I'm always skeptical on anything meaningful as far as a stock movement being tied to something where like 3 analysts or something have projected it, just because they're not. So, well, I can't throw this up since Tevis is gone. But I'm going to look real quick, financials and actually estimates. And yeah, there's no KPI estimate. Sometimes they do for fiscal AI. So,
what did you want to throw up?
Oh, it's just here. I'm going to throw this up. So my answer to Ori's question is I heard that elsewhere. He's not the only one saying it. It's probably real. The problem is, okay, so for analysts, you can see the number of estimates just even on a quarterly standpoint or yearly standpoint that's increased quite a bit just because of the success of Palantir. That's not a large amount of analysts. And whenever you go to any other than EPS, you're going to see a similar number of analysts there. But if you look at just price, well, actually everybody has a price target. EBITDA, you're going to see fewer. So there's only 12, 8, 11 that even project that out. EBIT, same thing. Free cash flow, very similar, where it's fewer and fewer. And the quality of this data point is significantly less the smaller your sample size is. These all have, this probably has like 2, I'm guessing. Okay, actually more. But regardless, there's no commercial tab here. I have seen it in an analyst report or 2. And so my question is, how many analysts are actually projecting that? If it's like 2 or 3, I don't think that much of a market move is really tied to that. And I don't think we need too much of an explanation because it is in the SaaS bucket. And when you have names like Microsoft selling off on a very good earnings, and it didn't sell off today, but it was down a little bit today. I don't think you have to look too hard and just say, well, it's just a SaaS thing. It's kind of caught up in that for now, even though I think it's differentiated. But thank you for the donation.
Yes, definitely. Thank you, Ori. Great friend of the channel. Did the IR team say it's a good time to buy? Obviously, they're not going to say this.
No.
Kirkland is better than Monster.
No.
Personal preference.
Monster is better. I really like this peach. I think I actually like it even better than the light blue one. And the orange one is just really mediocre. It's not the worst energy drink I've ever had, but Celsius is, every flavor of Celsius I've had is better than the orange one. So
That's saying something.
Yeah.
Renee says, I've been taking profits from NBIS and putting it into Hood. Thoughts? I mean, congratulations on the gains. And I think Hood can do fine from here. I think it has a bright future ahead.
Yeah. The Hood, at least this year, the main thing is what happens with crypto. And we've seen crypto, it may have already bottomed. I still think that we have further to go and maybe a little bit further down. We'll have to be wrong because we're unpositioned. But either way, I'm prepared. But if I'm wrong and the crypto winter is just a mini one and it's effectively over, that's probably not a bad move at all.
Yeah.
But if not, you might be regretting it for a little while. Long term, both great companies.
Yes. Thoughts on Google being the world's largest company as of today? I mean, we've underestimated Google for a while. I mean, Google's like doubled over the past 12 months or so, right?
Yeah. I think, I mean, like, I don't hate it from, like, if you're looking at it just purely from a Google standpoint. I think it's absolutely ridiculous because of NVIDIA and the way the market has treated them. And part of it is, AI CapEx cycle stuff, which benefits NVIDIA. It's weird. And the other is this narrative regarding the TPUs specifically, and also the Trainium units from Amazon. Let me see if I can find this. It was a really interesting note on TPUs and Anthropic. I think you might have actually sent it to me, Tevis. Do you remember that?
No, I don't remember.
Or, let me see. Oh,
Wait,
well,
what is this?
it was on Anthropic actually putting too much reliance on TPUs and focusing
Oh yeah,
on
I have
just
it. I have it.
the specs. Yeah, if you could throw that up, I thought that was really fascinating.
This?
Now, I'm not bearish anymore on Google at all, but I think that this is pretty important. So, part of Anthropic a miscalculated compute needs is how much they can get out of TPUs in practice. TPUs look strong on paper with all their white papers, but NVIDIA is engineering that works in practice. And by the way, a lot of that has to do with simply CUDA and the way that their software has worked. Like even like these really old GPUs that they have that are relatively old, I mean like 6, 7, 8 years, are so much better and have improved so much just because of the software support and that side that NVIDIA excels at as well. So,
Dude, look at the spend difference between OpenAI and Anthropic. Like OpenAI is outspending the hell out of Anthropic. I mean, it's losing the race, but it won't be losing the race for long if Anthropic gets into severe compute constraints and can't compete anymore because they didn't make aggressive enough investments early on enough.
Yeah.
So thought.
So yeah, no hate on Google. I think that where it's at is really deserved. I think it's criminal what's being priced into NVIDIA right now. It's ridiculous.
Yeah. Trump news. Are you covering that? Yeah, he said something about them reaching a possible deal. Let me see. I think Amit made a post about it. Yeah, here we go.
Okay, I didn't see this.
We'll read it together.
Oh.
Based on the request of Pakistan and other countries, why is countries capitalized? I don't know. The tremendous military success that we have had during the campaign against the country of Iran, and additionally, the fact that dude, like every other word is capitalized. This reads like a freaking hostage note. You know how they like cut like letters of the newspaper? And, like,
yeah. That the first thing that came to my mind is like, at least it's evidence that AI is not writing his tweets. There's no M dashes, and like the capitalization and run-on sentence are all over the place. But he's the president; he can do it. So yes.
Anyways, neither here nor there. Where was I? Campaigned against the country of Iran, and additionally the fact that great progress has been made towards a complete and final agreement with representatives of Iran. We have mutually agreed that while the blockade will remain in full force and effect, Project Freedom, the movement of ships through the Strait of Hormuz, will be paused for a short period of time to see whether or not the agreement can be finalized and signed. President Donald J. Trump. Have you seen that guy on Reels or on TikTok or whatever, where he reads these tweets exactly like they're written, and he always just yells at the name because it's all caps.
Yeah, my kids are no longer that age, but I used to do that too. When a book would like capitalize the first word, some will do that just as a form. I always yell it out, and it would annoy my wife to no end when it's bedtime and like reading along and loud as I could. So yeah, that's great. No, that's really good. If an agreement is actually made with the free passage, I think that's really key. The market seems to have moved on from this narrative. I think both directions, but if we do have a lasting peace and things start actually moving in that direction, I think that there's, the market might get a little bit of a pop from it. Obviously, if they start shooting at each other, which I don't think the United States or Iran want right now, then the market will react very much negatively the other way.
So let me ask you this, Roy, because I think the sort of first order effect is, war end, market up, war goes on, market down. Like that's very rudimentary, but do you think this is going to be a sell the news event?
Not sell the news, but I don't think like it's not gonna the market's not gonna rally 10% over like a week, like some people might think. Like it on this news, it might pump 3% and then fade that over the next day or two. So it's up like 1 or 2%. I think a lot of it has been priced in. We're at all-time highs. I mean, I don't think you can say this is weighing too heavily on the market.
Yeah, I mean, did you see that crazy stat that since March 30th, which was the bottom, S&P has rallied 15% to now hitting new all-time highs? Just straight line up in a month.
Yeah.
Crazy. So
Absolutely.
when it goes, it can definitely go. All right. When do photonics and memory names stop getting bid up? When they stop putting out insane growth numbers, dude.
Yeah, I think you can see just like go back to last year when silver was rallying like ridiculously and see how long that lasted. Or go back a little bit further and look for some of the meme stock action that was happening early last year. It seems like forever ago. And see how long that lasted. Open Door, is probably the main one that I had in mind there. Things can last like this for a while. Now, the difference here is with memory, the demand is absolutely ridiculous and real. And there's not that many players in the market. And to get a new player in the market would take a lot of time and a lot of money. So they're positioned very well. Photonics is more forward-looking as kind of like the next thing. And so it wouldn't surprise me if the two stop running together at some point and that memory proves to be a little bit more durable with photonics retracing some. But it's hard to say. Photonics is really big. The market is forward-looking. I figured that this year there might be some pricing in for photonics. I didn't expect this fully. It was like also Air does this. But that's what's causing that and many other names, including Poet, up 30% today. Are up tremendously just because photonics is getting a bid. So all that to say is, maybe 3 or 4 months from now, we could see further upside for all of it. But I think maybe the euphoria or the blow off the top moment arrives sometime within that time. And it could be sooner than later. I wouldn't expect this to be like this by the end of the year. I don't think that there's any way to do that. See that.
Yeah. TradeBot Cycle says, "Hey Roy, hope you're doing well. Did you get a chance to see Cohen's recent interview?" Oh, buddy, rewind to the beginning of this video. It's the first.
It's on the website.
Yeah, half stock, half cash. How bad the Lakers lose tonight? I don't even know who they're playing, bro. I haven't watched the basketball game all season long. I told you guys this before. I do not care. It's playoffs. I get updates on X. I genuinely couldn't. There's zero shred of interest for me to watch it. UFC is the only thing I'm watching right now. When football season starts, you're going to watch that too. But
you didn't even watch the SoFi play-in tournament? What SoFi investor are you?
No, a bad one, apparently. When the stock goes up, I'll watch the play-in tournament. How about that?
Yeah, the Miami Heat and Charlotte Hornets game was really good. And sadly, the Heat lost, but, it's all right.
What's your opinion on the proposal for companies to only report twice a year? I think it's stupid. I think investors need, dude, you live in an age of AI. We need instant data, not delayed data even further. Even 3 months is such a lagging indicator for so many of these modern companies. And now you're saying once every 6 months? What is this, the fucking 1800s?
I will give you 3 answers. As a content creator, terrible. The more earnings, the better. As an investor and for retail, I think it's also bad because the more information that we have, the better. And third, if something like that does happen, I mean, it helps companies out a little bit as far as regulatory burden. But I think that this might actually really benefit Figure Technologies. They had a couple of announcements today. They got earnings coming up. I need to double check the date. I think it's in 2 weeks. I need to know that too. But they have launched the on-chain private equity network earlier this year. And essentially, this is not just tokenization, but actually offering your stock on-chain directly. There's some benefits from that, but it's not like an immense number of benefits above tokenization. There's a couple of them, but that would be something that if this shift happens and all of a sudden companies are able to be less transparent, if they're able to not only offer their stock directly on that, but also use the democratized Prime platform, which the two agreements that we saw today are all about that, you can actually see on chain what's happening in real time with these companies. Now, some are easier to see than others, but that's one of the things I love about Figure is you can actually take a look right in and know exactly, well, not exactly, know quite well how they're doing just because it's all on the blockchain. So if you get this, I hope we get a lot of that, and I hope it benefits my book.
Yeah.
I got to do that deep dive soon with you guys. Stock Tank episode.
Watch, but not watch in the I have a TV sense. Yes, I don't have a TV to watch basketball. Ha. Let's laugh at Tevis, guys. He watches shows on a monitor. Do you think Chris is trying to persuade management to interact and lean into retail more? Yes, I think absolutely Chris has been a strong internal champion of SoFi management speaking more to retail investors. 1000%.
And let me also say, it's not just Chris. Like, I think they hired Chris with this in mind as well, at least in part.
At least in part, yeah. Can you explain poor man's covered calls where you sell short-dated covered calls against long-dated leaps? You just explained it, dude.
Yeah. Yeah, the only special thing to note is that the way that they close out, if they're in the money, is differs from brokerage to brokerage. So whatever brokerage you're on, research that because it's a little bit funky on some, and it might just be better to close it out manually.
Apparently, Ryan Cohen broke it down with Charles, what's his face, Charles Payne or whatever. That this is a 9-minute interview. Apparently, we're not going to watch this, but I just want to show you guys. He apparently broke down the entire deal here, so it's possible that he just has some beef with CNBC. But again, I just think this reflected more poorly on him than it did on CNBC.
For sure.
Like, how about you
if you hate them, just don't go on their show.
Or say you're going to go on their show and then bail in 10 seconds to going live, and then they look stupid. And it still reflects a little bit poorly on you, but jokes on them. Don't go on the show and then say I don't know. Anyways. Any thoughts on Clarity Act and impact on Hood or SoFi? Yes, I talk about literally this every Saturday. I talk about Clarity Act and regulatory movement. We did get some movement so far this week. Tune in on Saturday where I'll talk about it. But it seems as though Clarity Act confidence is the highest it's ever been, that this is going to actually get moving. Obviously, week of May 11th is when we can expect the movement when the Senate comes off of recess. But again, I go in depth on this stuff every Saturday. Go ahead.
And I went in depth on it on Monday. So if you're really chomping at the bit, just watch my video on BMNR that dropped on Monday. And there we go.
Ruthless, Roy. I love it. You savage. What's a good strike for cash secured put on Palantir, and how far out?
So I sold one. I think I said multiple at one point, but it was one cash secured put on Palantir at 130, which I'd be fine if it filled. Looking further out, I'd probably really honestly anything at 125 or under, I'd be very happy with personally. And I own a good bit of Palantir. I'm not going to be writing those just because if I have an established position, I tend to be a lot more greedy than if I'm just trying to get in. So if you're just trying to add, I mean, it's not financial advice, but if Palantir gets to 100 or below, I'm happy with every share that I buy at that range. And Tevis seems like he is too. So, but I don't like writing personally covered calls, or not covered calls, cash secured puts too far out. Usually no more than a month out, oftentimes just a week or two out.
Yeah. Yeah. What's a good price to buy? What's a good price to buy NBIS now? Highly doubt it's getting to 100 again. It could definitely get to 100 again, man. What can I always say to you guys? Every single freaking Tuesday, you have me repeating the same thing. The market is very short-term focused. It's recency bias on steroids with the market, man. Like rewind, like literally go back and watch bootleg from 3 weeks ago. I'll say, oh guys, like NBIS at $80, it's cheap, at $90 it's cheap, and you guys are like, oh no, it's gonna go to 50. There are so many people on X who are like, yeah, it's gonna go to 50. It's like, all right,
And they could still be right.
well, sure,
Probably not, though.
now.
50 would be really hard. But yeah, like all seriously, it could well easily, and it wouldn't even shock either of us that it's under 100. And that's even without too much help from the macro.
Yeah, I mean,
It's volatile.
I don't think it's gonna go to 100 again, but my point is,
Probably
it's like,
It's
you
not
know,
crazy, though.
it's not crazy. Now, what's a good price to buy it? Well, it's a $40 billion company. It depends on how long you want to hold it for. If I didn't own it, I would buy it here, personally speaking, because I'm bullish on what they're going to do over the next couple of years. And I think it's going to be a multi-$100 stock over the next couple of years. I think this thing can easily make a case for this thing to be at $400 in 2 years.
Yeah, and I'm just going to keep rolling until I don't have to one way or another. But yeah, I'm at a double right now, but it's a great company. It really is.
Yeah. And is this going to be the first earnings you're going to be listening to, Roy, or you're not going to listen to earnings?
I've listened to last year NBIS earnings when I was a shareholder, but as far as live, see, I think I'm traveling that day. What day do they report?
Wednesday, next Wednesday.
Yeah, I'm going to my graduation, guys. Walking, something that wanted to do to honor my parents mostly, but it'll be fun for me too. Got the crazy robe and hat and everything. I'll take a picture and put it on. Probably YouTube too, but on X for sure. Just because it, like, you've seen like the garb of like PhD doctorate students and stuff, right? Like weird hats and cloaks and just
yeah,
it's something. So
I mean, that's what you get for wanting to be a doctor. Wear your little dress.
And they're going to, as far as like an honor or recognition, they're giving me a gold medallion. I'm pretty sure it's not real gold, but if it is, I'm going to melt that puppy down and buy some NBIS.
Oh my
It's
God.
not. It's just
So pragmatic.
Give me the stocks.
Oh my God. I'm surprised you're not an immigrant with that mentality, man. That's like what my people would say. Anyways, what's the stock that you guys disagree on the most? What is the point of disagreement? I don't even know, man.
I mean, like, you've convinced me on NBIS. Yeah. Let's see. You're not in Pinterest anymore, right?
No, that thing popped. But no.
Yeah. Maybe Nvidia? Like, you're not in Nvidia?
I've been in Nvidia multiple times over the past year.
Yeah, you're out of Tesla. I'm out of Tesla. I guess, well, like, Meta is one that's not, it's not about the fundamentals or anything, but like the moral aspect is Tevis is a degen and he doesn't mind supporting genocide or censorship or communism or what have you, as long as he makes. No, I'm just kidding. But like, for me, I can't on Meta. I've talked about it in the past before too, which, people look at my Palantir investment the same way. So I get it. There's no judgment on Meta shareholders from me. But that would probably be the biggest disagreement. Yeah, you're convinced on Robinhood now, and Palantir, it's just, valuation and timing thing. So I don't know that there's anything in my portfolio that you're like, maybe Nubank. Like, do you hate Nubank or something?
I don't hate it. I just don't own it.
VG. Yeah,
I
I think. Yeah. What else? What's something else that you own that I don't? Other than Meta, Amazon, maybe.
I have Amazon. You don't have Amazon. I have Lemonade.
Yeah, and it's more that Lemonade is just something that I try to steer clear of insurance typically, but
yeah,
yeah.
I have NBIS, SoFi, Meta, BMNR, Amazon, Bitcoin, VG, Ethereum, Air, Hood, Lemonade.
Yeah, so it's almost like we talk a lot to each other and have learned to
It's worked so
If
far.
somebody's really bullish on something, maybe it's worth a listen. So
It's worked so far.
Figure might be it, Ron.
Mm.
Yeah, and I think it's for you, like you just don't know much about it, and it is like that. It's a complicated little company. It really is. SoFi really straightforward compared to this. Yeah, I can't do it, man. I can't do it. I'm sorry.
Yeah. All right.
And I even don't hate Zuck. Like honestly, I think he's changed and matured in a lot of ways. And I think he's a great CEO. I just
Yeah, I understand. I get it. I don't want to corrupt your soul with a stock that doesn't even make me money. Should I full port ASTS? Yes. Do you guys ever sell?
not financial advice.
Yeah, do whatever the fuck you want. I don't care. Do you guys ever?
I don't.
No. Yeah.
No,
Unless it spreads, in which case, yes, I do.
that's true. Yeah, I've done it in vertical spreads, but
was it just the three of you in the interview with SoFi RR? No, it was 1, 2, 3, 4, 5, 6. No, 5. It was 5 people in that interview, of which me and Roy were 2 people. So you can do the math.
Tanner had his own special one because it interfered with his spa time otherwise. So
special interview for a special man. Did Tanner call you to have us with his daily panic over NBIS? Dude, he actually did call me today. I didn't pick up because I was in a meeting, and then he texted me something about website hosting or something, and I was just like, "You always call me when you need something, Tanner. Never, hey, let's grab a beer." Yeah, he funny enough did call me today. How confident are you on SoFi after the recent interview? I mean, it's not
a bit more, yeah.
Didn't really change my.
And I was already very confident, so.
Are you guys selling covered calls on SoFi? If so, what strike? I have $24 covered calls that I sold at like $19 before earnings. Those expire on May 15th, and it's literally not even worth for me to close them because I'll get hit with like $50 of fees because it's so expensive to do SoFi options because it's such a low sort of market cap. Or yeah, I was actually thinking of switching my entire portfolio to another broker that has $0 options trades just for wheeling SoFi because it's not even worth it, man. Like I'll make $600 on selling covered calls and I'll pay $50 in option, like in fees. And then if I want to close them, I'll pay another $50 of fees. It's like, dude, like that's a good chunk of my prop. And it's like, it's not worth it. So yeah. I'm letting them expire on the 15th and then I'm probably going to write new ones at $20 or so.
Yeah, I wrote 20s into this Friday, very low premiums, but you know, I'll take it. I might have even done 21s, but yeah, there's some weeks where I look at the share price, I'm like, nah, I'm not even going to bother.
Why would anyone look at making purchases in the AI infrastructure sector at this time? Why not buy leaders in sectors that are hated right now?
Well, you know, there's different investing styles. So like if somebody's a trader, they would never or very rarely actually look at something that's been a laggard. They would look at leaders that continue to show leadership, especially when in times when the market is softer, and that's been this sector for the most part. The other is like if you look at the multiple of Micron, for instance, looks maybe expensive, not really from price earnings this year. Forward just 1 year, it's like 10 forward PE with ridiculous growth. And so like somebody could look at that and say, okay, it's still mispriced. No, it's not going to get the full premium because there is some cyclicality, but it's still a lot of upside. And if they had said that 2 weeks ago, some people would have laughed at them, but they've been right so far. And then the other is even within this space, like NVIDIA, there are laggards. But I also don't think it's wrong. Like if you're very bullish on, like, let's take Enphase, for example. And you're like, hey, solar, it's going to be great after midterms, Democrats coming in, There's all kinds of, they've in the commercial side now, not just the residential. They have this new IQ8 microinverter technology that's really, whatever it is, and energy rates are higher and there's more demand. If that's your thesis, it makes absolutely sense to do that. But I wouldn't just go purely on this has been running and this hasn't, so let me sell what's been running and buy something that hasn't been.
Yeah, and also like in the short term, like the market doesn't switch who its darling sector is that quickly. It takes many quarters and sometimes even multiple years for the market to pivot to different sectors or verticals. And as a result, what's been running will likely keep running until we top, and what's been hated will likely get cheaper until we bottom. You don't know when that point is. And so right now, it's like if I had equal amounts of money, would I buy SoFi that's down 50% or would I buy NBIS that's up 100%? I mean, there's a very strong argument to be made, regardless of the fundamentals of either of those companies, that I want to ride that wave. I want to ride that momentum to the very top because I don't know if SoFi can go to 10. It's already gone to 15 from 32. Now, over multiple years, then maybe that math is different. But if I'm looking until the end of 2026, I would probably argue that the objects in motion will tend to stay in motion. I watched the last Tevis and Tanner production. Weird vibe. Don't see it lasting. I like Tanner and listen to most of his stuff, but too much sauna has tweaked him a bit. He's weirdly defensive. Thank you for the donation, Jack. Really appreciate it. And thank you for following this content. I really appreciate your support as well. Look, I mean, content aside, Tanner and I are genuinely friends, and I value him as a friend. And so, I think he's always welcome to stream with us. Like it's all jokes, on the stream. Like we have little gimmicks at his expense from time to time, but genuinely, like he's a good guy. He cares, and that's the important point. Yeah, he won't get a beer with me because he's not drinking this year, man. It's not like he hates me or anything. I actually talked to Tanner, like we talk multiple times throughout the week. I call him or he calls me. Same with Steve, same with Matt. Actually, Roy is the one that I talk to the least. Funny enough, Roy. In personal time, but I talk to him like probably the most in aggregate time if you count this. So, but yeah, there's no bad blood or anything like that. Yeah, he probably is in the sauna right now. What time is it? 8:39.
But yeah, no, like legitimately, yeah, I know people like to read into things, but it's scheduling stuff, and Tanner is involved in a lot of different things. Steve is too, as well. It's not because there was a falling out or anything. If there was, I probably wouldn't even say anything. But yeah, no, we're all still friends.
Yeah. All right, let's move on. Yeah, no, you're good, man. It's weird because like I didn't stream with Tanner for a while, and you sort of like once you stop working out that muscle, it's almost like you like lose rapport. It becomes a little bit more rustier, if that makes sense. Like with Roy, for example, I stream with him twice a week. Like I understand his mannerisms, I understand the way that he operates, and when he sort of jumps, like there's a yin and yang, and so if we have a surprise stream tomorrow, I would be so much more fluid and comfortable because I've already established that rapport and reinforced it over much repetition. But if I was to stream right now with, Chris Patel or Matt Money or somebody like this who I stream much less frequently with, it would be a little bit different. I would feel, and maybe it might not reflect in what I'm saying or how I'm acting, but like I would feel more on. Like I need to like pay attention to this. Whereas like with this, it doesn't feel like work. If that makes sense.
It's comfortable. So we're in other words like an old married couple, and with Tanner, it's like a third date.
Yeah. Okay, let's move on. But yeah, thank you for the $10, Jack. Really appreciate that. All right. MD asks, why would anyone look at make? Okay, we answered this. How do you feel about hymns here? Haven't looked at it.
It's down a little bit, 26.33. I mean, like, I have a video that I broke down so probably like look at the video. I'm not buying. I need to see better execution out of the CEO. He's been a lot more guarded with his communication on X, which frankly was needed. The lawsuit risk is kind of over, it looks like. There's partnerships that are coming out, and it's interesting. Not enough to be even like top of the watch list type of thing for stocks that I don't own. But I'll keep an eye on it. I don't think it's a bad opportunity here.
Matthew says Tevis is locking down a doctor. Way to go.
but not the kind of doctor that actually brings home the big bucks or saves people's lives. So
no. Yeah. If I find you a Hawaiian girl, you're gonna have to move to Hawaii. Yeah, please twist my arm around moving to Hawaii, dude. I live in Canada. I'd move to Hawaii even without the girl.
Man, you wouldn't be able to shovel snow though. I mean,
yeah, I would miss that. I don't shovel snow right now, man. I'm in a condo.
Yeah.
All right. Yeah, I hope to see some of you guys on August 15th in Toronto. I'm actually booking my flights for Europe, and I need to decide when I want to come back. And the main consideration was I got to be here for August 15th. So I'm actually coming back a little bit sooner, late July, just for you guys. So if you guys don't make the trip, I don't know what to tell you.
And I'm 50-50. I might actually be there. If you asked me 2 weeks ago, it's like 10% chance. So,
hey man, we've had this conversation before. You say yes, and then you back out last minute. And that was to Mexico. This is to Canada.
Yeah, that it's because I'm married and the spouse changed her mind. So it's like, well, it's weird, like when you've been married so long, like doing a trip like that without your spouse. So versus like business type of trip, which is what this would be to Toronto. More than business, we'll get to hang out. Tevis owes me a dinner or something. So yeah.
It's fine, dude. Matt Money owes me $500 and he's going to be there. So we're just going to make Matt pay for everything. And it's
That's
500
right, yeah.
US dollars. We're going to ball the hell out, Roy.
Oh yeah.
I'm like
That
buy
exchange
a whole
rate.
restaurant. Yeah, exactly.
Yeah.
What is it? Copy to Mitz bricks, bro. I've had the bricks since day one. All right. It's very. I wanted to make an aesthetic viewing experience for you guys. I think the only thing I messed up here is just these giant harsh lights. I think if I would or could or should change anything, it would be warmer lights and a more like ambient aesthetic. Because right now I blind myself every time I go live and I look so freaking old too. Yeah. Bring wifey, Roy.
I don't know if she wants to go to Canada. So legitimately, like
fair.
Yeah, it's been hard. So we just to open up a little bit more. My oldest son officially moved out. We've been making him pay rent and everything, and treating him like an adult. And so the leap from that to where he's at now is not too much, and he saved up a lot. So it's like that's awesome. But my daughter, even though she's old enough to be at home, she doesn't have the oldest brother here, and the next older is going back to college in August. So I think we'd have to bring my daughter too, which isn't the worst thing, but it changed the dynamic some. So a lot, actually.
Yeah. Why punish the wife? Nobody wants to come to Canada. Yeah. Toronto's not exciting. Yeah, guys, I get it. Please get me out of here. I'm happy to change. I will move today. I will leave everything in this house. I won't even touch it. I'll just take my phone, my laptop, and I'm out. I don't even need anything else.
Golden visa, mate, man. 5 million USD.
You find me some way out, and I'm there. All right. I'm not staying here out of preference to pay higher taxes for a shittier life experience. You guys are triggering me. All right. Daniel says, I'm building out a bigger thematic now on data center nuke play, and I think it's the next to fun and good LT. VS DUK. Oh, these are tickers? VST,
Yeah.
Duke, Seg. I don't know any of these.
Yeah, I was gonna say, like, if he was gonna like have a list up, find the fake ticker and listed those, I'd be like, I'm not sure. I think I've heard of 2 of them, but that's the most. I do know some names that are in this space. I do think that nuclear will go nuclear, and it did, previously, but energy demand is substantial, and it's been interesting to see the switch from not in my backyardism in the 70s, which I wasn't around then for, but towards nuclear energy, especially in Europe, but also here in the United States, to a much more friendly regulatory environment, especially in the United States. And it's just because of demand. Great energy source, not appropriate everywhere. Like, it makes less sense in Japan than it does in continental Europe, where there's just not natural disasters. But yeah. So I don't know any of those names. I do like the space, but it just was easier to see LNG and VG doing quite well.
Bro, at $1 million, I have options. Oh, here we go. We're getting a negotiation. 700. Do I have
Tevis? Not $1 million cash, half stock.
I like it. Can it be half Canadian dollars, half stock? Because then it's significantly cheaper for me. All right. yeah. Details on the website.
I love that so much. Yeah. I used to think when I was younger, like, investing in the markets was boring, and it's not. I think when you had to get the information from a newspaper, it was boring, but now that we have social media, yeah.
Nick says he'll adopt me.
All right.
There you go. Too bad I'm 31 years old, Nick. Anyways, let's move on. You guys gonna check out IonQ earning tomorrow? Could be exciting.
Ionic, yeah. I'm not really into the quantum stuff. I have some doubts on the space. I do have a video that's overdue on the impact if this is real and nearer term. Like, I'm not saying it'll never happen. There's been some interesting papers and research that has been published on the security of crypto, what needs to happen with Bitcoin and Ethereum and others. But yeah, that actual individual earnings, probably not. But if there are some, usually on X, like if there's something that's incredible that comes out, or a choice quote or something like, hey, we're going to hit this hallmark next year, I'll pay attention. But yeah, not the full thing.
Tevis, I'm sponsoring a visa for you to work in Alaska. Bro, it's
Alaska's
Alaska.
awesome.
I don't
It's
want
awesome.
to.
I'm from there. Don't insult Alaska.
I'm trying to get away from, and now you're in Texas. That's a prime example.
Well, I tell Texans it's because I got tired of living in a state that was big, and so I wanted to downsize. They don't like that very much, but
31. Yeah, I'm 31, believe it or not. I probably look like your peer with this white ass hair, but I am 31. All right.
it must be metric system years or something that you count them differently.
Dog years. Thoughts on DCAing into IGV over foreseeable future, given the bearish sentiment on software? Seems like good exposure to the strong software companies.
I would rather personally just buy the strong software companies. So if you like, for instance, Microsoft, ServiceNow, and CRM, I don't particularly like CRM, but why not just buy those? Especially if you're looking at the IGV and you're like, hey, I don't know if it's still the case. Actually, let me pull this up because it's really, I'm curious on IGV and what makes this up. Oop, that's not, there we go. Okay, let me share here. And so you with IGV, you're going to get about 9% Oracle, 9% Microsoft, 8% Palantir, 7% CRM, Palo Alto at almost 6%, AppLovin at 4%, CrowdStrike at 5%, Adobe at 4, Intuit at 4, and so forth. So let's just say like you're like, hey, I love Datadog and I think it's going to be amazing. Well, that's 2%. So why not just invest in Datadog if you're like, hey, this is going places? Or if you're looking at this and you're like, Oracle, I don't want Oracle. I'm not interested in Oracle, and Palantir is overvalued, and Mark Benioff I don't trust for CRM. That's a heavy weight of this. So look this over. This can change, and it oftentimes changes on the share price as well. But just make sure that you like it. Now, if you're looking at this and you're like, I like 60% of this, and there's a bunch that I don't know, it's probably a great opportunity for you if you want exposure to software. It doesn't mean that this can't go down more. It is, and it hasn't been doing well, but that can continue for a while. So if you're long term though, and you like a lot of the companies, great. But if you really just like Microsoft, Datadog, and ServiceNow, or Intuit, why not just do those?
Yeah. Where do you see SanDisk going? Higher. Do you think people are regretting that they sold their position at NBIS in 150, saying it was overvalued at that price? Maybe, but they also locked in gains, which I'm never against.
Yeah.
What about ServiceNow? Yeah, where is ServiceNow trading at?
Yeah, I had not followed the price this week
so much, dude.
It did on what I thought was a very good earnings. Now there are some issues with ServiceNow. It's not like it's trading at a 10 PE or something like that.
It's at 2022 levels, man. What are you saying?
Yeah, it's not bad, but I'm just saying cheap can get cheaper. Is the main thing.
Sure.
And if you look at what ServiceNow has had to do just to even maintain the type of growth that they have, which isn't. We're not talking about like Palantir level, but it's also not Palantir multiples. I don't think it's a bad opportunity, but when I have a choice between let's just make it simple. If it's a choice between Microsoft or ServiceNow, I wouldn't touch ServiceNow. I'm very confident in the way that Microsoft is structured, that business will be around long term and also growing. And then if you take a more extreme example, a Palantir or a ServiceNow, I'm not buying hand over fist on Palantir, but I would buy Palantir just because I think it's a higher quality name with a far more durable note that, yes, I'm paying a premium for over ServiceNow, but I would rather do that if I have a long-term focus rather than focus on ServiceNow.
Dude, this looks fine.
It's not bad. It's the only name outside of Microsoft and Palantir that I'd really want to own in the IGV. I don't hate it. CRM, I do think is garbage, but
yeah, I don't know
that one's not even going to zero. But
yeah, all right, yeah. I mean, I don't know anything about ServiceNow, but I just looked at the numbers. Just now, it's like doesn't make sense. This thing is at 2022 levels. That's wild.
Yeah, it's just software overhang. Good company. I don't think it's a great. Yeah, here's my post right here, and it was building off of Arnie's. This is before the Palantir earnings. One of the issues, and really the only issue that I had with ServiceNow in that earnings call, is there's always, it's kind of like with PayPal, that there was always an excuse of why they didn't do better, and you hear that from James McDermott, and they're growing fine. Like this isn't bad revenue growth. But they talk about how they're, and like even in the way that Jensen Huang talks about ServiceNow, it sounds like it's just you would think if you knew nothing about the companies or investing, ServiceNow was doing this and Palantir was down here, but that's not the case. So Palantir just delivers, but I don't think it's bad. And if you're long term, like I don't hate it at all. Your camera looks weird. Or your view.
Sorry, I was typing something. Okay, let's move on. Roy, did you take any VG profits during the oil spikes? I did, and looking to get back in if we get to $10.
Yeah, I sold all my leaps. They weren't, as much of a gain as I was hoping. I think I sold them around 15, all the rest of them. I sold some higher, thankfully, too. And I did here and there take some shares off the table. I've re-added those since then. And honestly, for me anyway, they were at 9 and some change prior to what happened with Hormuz and Iran. And I don't think it was forward speculation. If we get down to 10, I'll definitely be adding. And I may do that at 11 again if we hit that, and we may. We'll see.
All right. I thought NVIDIA would be the enterprise platform for AI and factory. Why did Jensen think ServiceNow would be the platform for it instead of NVIDIA?
I don't know.
Great answer. Revised 2026 price. I just want to get through them. Revised 2026 price target for NBIS. Look, guys, I put 200. When it hits 200, we'll talk. I'll put out a new price target when it hits 200. How about that? Okay. So maybe
Just
next week I'll make a video.
Do what I did with Air and just keep it the same, regardless of where the share price goes.
Yeah.
People still ask me, they're like, price target, it's like at 93. I'm like, $70.
Yeah. Where did you buy that hairpiece? Bro, you think I would actually choose something with this much white in it? If I bought it, I would have long, luscious, flowing, rich blonde hair and just swing it around like Brad Pitt and Troy. All right? That's if I had a hairpiece.
Honestly, I think you could do a George Clooney almost. Just like have the persistent gray in your hair that doesn't fully turn silver or gray for like 20 or 30 years.
I hope nobody else from my work watches this show, because if they do, they hide it really well, because I am not this person at work, dude. But yeah. Thoughts on Uber in the AI? Oh, they report tomorrow morning?
Yeah. Yeah, we talked Uber, I think, last week, and yeah, I'd just say the same thing. I think they're a good company. They're just not, in my mind, like necessarily a great company. They're not going to go away because of robotaxis or Tesla or anything. Well positioned, well led. I like them. I just wouldn't personally invest, but I see why people would. No expectations going to ER.
Any chance we can get Tevis to switch from individual stocks to an ETF? I'm genuinely concerned about the brother's stress levels. Dude checks the market so much he's starting to look like Roy's Pops. It's because of my main job. It's not because of the market. So that's why. As for ETFs, bro, that's too boring for me. Like, I wanted to buy a property because I was like, ooh, this will cash flow and I'll collect money every month. And then I ran the math and I was like, 10% return, 12% return. I was like, ew. I'm so spoiled by the individual stocks that I invest in that that return doesn't seem that appealing to me. And then I'm like, okay, well, if I'm going to lock up, 200, 300 grand to make $2,000 a month, I was like, why would I could just get that off dividends, dude. Or running the wheel or something. I don't know. At some point I want to play it safer. I think that was the logic behind me going heavier into Meta and Amazon versus, not being heavier into SoFi and NBIS. But I don't think I'm fully at ETF level yet. Eventually, as the portfolio gets bigger, I will start to get closer there, start with QQQs and then move to SPY maybe eventually. But right now I'm still in accumulation mode, and as a result, taking on more risk. What's the market missing about Palantir and NVIDIA, Roy?
Palantir, what I think that they're really missing is they don't understand how Palantir is growing in this way and why. That it's not a fluke. I mean, analysts understand that now. Because, again, they're not growing because of inorganic acquisitions. Not saying that that's bad, but it's organic. It was just showcasing the moat. Margins are actually improving, not decreasing. Revenue is accelerating, not decelerating. Long-term contracts are also accelerating. They don't understand AI. They kind of do, but they're just being lumped in the SaaS bucket right now. And that's weighing on the Palantir stock. It's a higher valuation too, but I think they just don't understand that when Karp says that they plan to grow 100% revenue year over year next year, it's not just baseless hype and speculation that is unwarranted. There's a really good reason. They may not hit it, but if they don't grow 80% next year now, I'd be really surprised. and it's insane from this level, especially given the cost control. And NVIDIA, yeah, I think we talked about that already. But if the fact of the matter is, they don't believe Jensen Huang when he came out with that crazy $1 trillion remark over 2 years as far as revenue. You look at the analysts; they're like, "Nah, that's not going to happen." They think that this cycle of capex is just going to drop off the cliff, and as a result, they're not willing to give NVIDIA a premium. And they also see a lot of the competition, but they miss like the TPU thing that we talked about earlier in the Google segment. It is kind of expected that companies would eventually go into this space, but NVIDIA has by far the highest quality, and as a result, they will continue to be able to command a premium. They're not just delivering these GPUs that they design, but also the software that empowers it, and they get how this works. It just works. It's like Palantir. So it'll take time just to sort out that quality. Every single sector in space is like that, where everything just kind of runs, and then that which is the highest quality has the most durable gains.
Some crazy stocks: Sentinel-1, Snapchat, and Mphase. Some thoughts?
Yeah, I already shared on Enphase earlier a little bit, like as a hypothetical. I don't hate it. It's hard because it's so cyclical, but it's pretty beaten down, and we're heading into midterms with Democrats. I may, like if VG does another pop and I take some gains, rather than invest in Next or another LNG name, I might rotate some into Enphase, maybe. Maybe I'm not sure. I would need to catch up on a lot of earnings calls because I've read a couple quotes and top line numbers, seen some PRs, but I've not kept up. Sentinel-1, I don't understand well enough as far as cybersecurity. I think they seem to think of themselves otherwise, but I think CrowdStrike is probably higher, obviously higher market cap, but higher quality. But I mean, cybersecurity is not going to zero in the face of AI. It's the opposite. Snapchat, I've never believed in. But it's hilarious to follow, and I feel badly for those. Although they could say the same on PayPal for me, but I am out, to be fair. That keep believing in this Snap thesis. I don't. I think management is key to almost every play, and I just don't think that they have incredible management or leadership or vision.
Yep. I'm kind of curious, who of you in the chat have signed up already for the Toronto meetup? Just let me know. I'm kind of curious to see if any of you guys are for sure going to be there 100%. Roy, do you have Vlad's personal phone number?
Nah. Yeah, I've slid into his DMs, so I'm one of those people that he follows. But I mean, I don't even DM him, or I think I have like a couple of times where I'm just, hey, congrats on this. I think not even related to Robinhood sometimes, like Harmonic's doing well too, which is his startup. But and he's really, really easy to talk to and get in. Like just he's an awesome guy. I really like Vlad. But no personal phone number, and even if I did have that, which I don't think I ever will. There's no way he would have time for that.
Yeah. Do you have a theory on why NVIDIA has been so sluggish the past 6 months while every other large semi is going parabolic? Other large caps like Google and Amazon are able to move, so it's not a large cap thing.
Yeah, I think beyond what I mentioned before, as far as a misperception that's just going to fall off a cliff because of competition and the way that the cycle has gone, it's willing to give a premium for Google and Amazon. So I think the market tends to overreact in both ways. And NVIDIA, like if you look at it on a historical basis, I won't even bother pulling up the thing, but look at it. Like oftentimes it'll run, and this is not just, by the way, since 2020, but it'll run heavy, then it'll taper off, retrace a little bit, and then set a new baseline and then run again. Not uncommon for a lot of stocks, but NVIDIA is certainly that way. It's been cyclical in the past, and I think that people underestimate or overestimate the amount of cyclicality, and then they also overestimate the competition. The TPUs, the Tritium units of Amazon, AMD's quality as well. Again, AMD has to give up equity to secure some of these deals, whereas NVIDIA actually secures equity from the other because of these deals. SMCI is smuggling NVIDIA chips into China. Not anymore, but they were not AMD chips. It's quality, man. It doesn't mean that the others are zero something, but the market is missing and misunderstanding that. And just not believing Jensen when he throws out these insane targets, even though time and time again he's hit them. So I think it's just a matter of time. I actually thought that this earnings cycle, because I think last week we saw it break into new all-time highs, and it's of course retraced since then. I don't know that this earnings is even going to be that move. I was kind of thinking it was because of last week, and now I'm like, well, it's retraced, maybe not. But I think before the end of the year, we'll see NVIDIA once again cement its legacy on top of the heap of the Mag 7 in terms of valuation. And that doesn't mean Google is down. Plus, I get to buy more here. I like NVIDIA under 200 just feels easy to me.
Yeah. Tevis thoughts on Arsenal making it to UCL final. Yeah, man, they've had a terrific season, and they even beat. I think today was when they beat Atletico 1-0. I didn't watch the match, but I saw the score. So bullish. I thought Man City would definitely come at the top of the Premier League, but Arsenal, who would have thought? Roy, when do you see Palantir above 150 again? I would say this year.
Yeah, could be even this month.
Okay. Yeah, this month. Just curious, how many stocks do you guys usually keep in your portfolio? I have
10, and I run out of figures after that, so I can't hold more for long.
Hold on. I have 3, 4, 5, 6, 7, 8, 9. I have 9. So there you go. 10K to invest. SoFi or Palantir. Dude, just do your own homework. SoFi.
Yeah, it depends on your time frame. And if you're like, I'll never sell it, then, if you're looking 10 years out plus, it's Palantir pretty easy. If you're looking at over the next year, it's SoFi, I think, pretty easily. And anywhere in between, do your homework. But yeah, I think both are good buys, but I would rather short-term buy SoFi here, long-term Palantir.
Dude, where the hell is Tacoma? What state is Tacoma in?
Washington.
Washington State?
Yes.
Isn't that near Seattle?
Yes. I don't know. Yeah, Seattle, Tacoma is like Dallas, Fort Worth. 2 cities that used to be independent that have grown into one. I don't know if they are administratively one or not, but you drive from one to the other. I don't think that you know it.
Tacoma. Dude, there's a Moscow in Washington.
There's a Moscow in Texas. Dude, there's like every European capital in Texas.
Oh, I see it. Yeah, Tacoma, right by Seattle. Yeah.
It confuses me so much when people are like, yeah, I went to Paris this weekend. It's like, you did? Wow. Oh, like, what did you eat? What did you do? Like, Paris, Texas. Like, oh. I went to Oslo this weekend. Cool. Oslo, Texas. Oh.
Yeah, that's actually a buddy of mine reached out to me, and he was just like, hey, we're hiring for a product leader, and he's in the Bay Area. And he's like, let me know. And I was like, I just got a new job, but thanks. And he's like, let me know anyways.
Yeah.
No, thanks. I work as a product manager. Well, I mean, I lead a product and design team currently at a fintech company. So they do real estate. What's the free options broker? It's Wealthsimple. It's up here in Canada. They have free options contracts.
Is it free, or is it free, not including the regulatory fees? I don't know if you guys have those.
Well, it's free. I think it depends on how much assets you have under. It's like one of their tiers.
Okay.
So if you have over a certain amount, it's like free kind of thing. Let's see. Hold on. I just need to read what these comments. I'm just going to bookmark. How didn't I know where Tacoma was? Oh, I apologize for not knowing the exact geography of a country that I'm not even from or in. Maybe if I married somebody.
Apology not accepted. I don't think it's sincere. So
we have Texas. Here in Texas, we have Italy, Palestine too. It's
I
a very
know where Palestine is.
What Texas is.
Dude,
Yeah,
like there's every country and every capital in the world in Texas. It's weird.
yeah, I work at a startup. My dad lives in Moscow, Idaho. It's funny. Yeah, over 2 hours. We always do over 2 hours, man. And
On Tuesday.
I know Friday too.
Yep. Monday we'll make it a 10-minute show. No, I'm just kidding.
Yeah, what state does chat think Tevis would be best suited for? Let's play this game. If you guys say a blue state, you're banned.
I was gonna say California, honestly.
Really?
San Francisco specifically. Have you been to San Fran?
I've never been to San Fran, no.
Yeah, I think
North
you'd like
Seattle. I've been to LA and San Diego, but I've never been north.
it. Seattle you would hate. So unless
Yeah.
you really like rain, and I don't know it. But yeah, California, like it's in San Francisco. I mean, there's some rough spots for sure, but yeah, I loved visiting there. I don't know that I want to live there, but
Vermont.
no.
Vermont sounds nice. Hawaii.
You
yeah.
might like, you might like Florida, and I don't think you'd hate Texas, but
That was what I was
I don't
thinking.
know.
Florida. I think, like, I don't know, man. Texas is kind of like a dump, but like I really like what it stands for. You know, cowboy hats,
It's
cowboy boots, and guns. Like I love that, all of it, and ranches. But it's
a dump.
Yeah. It's like
All right.
one tiny little city in a vast, desert of nothingness.
Whoa. Do you not know the Texas Triangle?
What's that?
Yeah, so it's not a city; it's multiple cities. So
Is
Texas
this like
Triangle.
Dallas, Fort Worth, San Antonio, Austin? or something?
Yeah. Let me show you. I don't remember the stat, but here's the here image.
Hold on.
Any
That's
tab.
a beautiful city.
Yeah,
San
so
Diego.
this is, I think, like 80% of the population of the state, maybe more. And so, it's got Dallas, Fort Worth, San Antonio, and where I'm at in Houston. This is Austin, and why am I forgetting this one? But regardless, major population center. Of course, once you go past about this line, it's a very arid and dry. It's still really cool. Like it's lots of things to do and see, natural beauty and terrible places. I think you'd actually like here the best though, Tevis. You're close enough to the coast that you still have access to really good seafood and sushi. There's a really funky, weird culture, but it's not like weird in a
Is that Houston?
crazy California way. In Austin, and then you're near Elon, so
I've been
and
to
Tesla.
Austin. I've been to Austin. Austin's nice. I like the little, mini tech district or whatever. I love the barbecue and I love the weather. But again, it's not like it's like 3 streets which are nice, and then the rest of it is kind of like a dump.
In San Antonio, you would also really like the Riverwalk is
So
like
San Antonio-
super cool.
I really liked
Yeah.
San Antonio, walking through like the canals and whatever.
The
And there's, like,
Riverwalk.
restaurants. It was really nice. Houston's the only major city I haven't been to. DFW was fine.
It's
It was whatever. Houston, I didn't go to.
The weird thing about Houston is like how spread out it is. It doesn't have one downtown; it has like 5, and as a result, there's no public transportation that's credible.
Telluride. This is actually a place. I swear to God, Tacoma, Telluride. You guys are just throwing truck models at me, and you're expecting me to think they're places. Is this an actual place? Where is this? It's like, what is this, a Chevrolet?
It's a town in Colorado. Yeah, I've heard of it before, but I heard it in the like a transportation context. But I guess maybe it's from
yeah. Bronco, where's Bronco, guys?
Yeah. So the other that's weird about Houston is there's no zoning, and so you can have like a church right next to a strip club, and it's like, it's fine.
I like that.
So it's Houston. It's a little odd. So, but I like it overall. It just but for me, like there's no like strong personality like Austin has or San Antonio has or even Dallas Fort Worth, honestly. So, but it's decent. Like the people here are great. The Houstonians. Oh yeah.
Yeah, dude, I need to go to Hawaii. Is Sonoma natural? Yeah, Sonoma sounds like a place, but it's also a truck model, isn't it? Are you guys running out of names for your truck models over there? What's going on here? Am I just noticing this? Yeah, Bronco is a town in Texas.
Yeah, you're pretty Williams Sonoma.
Williams,
They got on the SP 500.
the paint company.
It is a real place, though, apparently. So, like, there's a Sonoma, California that I wasn't aware of. Probably a Sonoma, Texas, too. Yep, there's a Sonoma, Texas.
Of course, Kia Sorento.
Okay, Sorrento, Texas. Nope. Okay, thankfully there's not a Sorrento, Texas. I'd be like, come on. All right.
There's a strip club named St. So this was Amsterdam. When I went to Amsterdam, there was like a strip club. Well, it was like the red light district, and like overlooking it all is like a huge church. And I was like, this is so paradoxical. It was amazing. That's a great place to be.
Yeah. I hated Amsterdam when I was there.
Really?
And this was when I was a kid before I was a Christian. It was just, we went through the red light district. But that's a story for the Ron and Travis show, not this one.
Yeah, it is. It is.
It was not a good time. Oh, man.
Well, shall we? One thing you're going to love about Houston is the food. We have the most diverse food in the country. I don't even know if that's saying a lot, man. It's like, it's America. It's not like, I mean, maybe, I guess, is the food's diverse in America, if not there.
It's ridiculous. And it's not just the restaurants. Like, it's the markets. Like, you can get anything here.
Thank you, Jared.
And it's cheap. Like, the prices are ridiculous in Houston. Houston grocery store killed communism. So, in Russia.
Jesse, don't think I forgot about your $600 donation for the TV. Don't think you're off the hook for that. Yeah, honestly, June, I could definitely, like, mentally, I'm already in Hawaii right now. Like, just need to be there physically. But like, it's a long flight that I don't want, like, and it's going to be super expensive. But like, we could rent a Jeep and drive around and go from one of the islands to the next. Like, that could be really fun. Now I want to go to Hawaii. Have you ever been, Roy?
Yes, 3 times.
I'm jealous. I'm very jealous.
Yeah, that's one of the things is an Alaskan, just to survive, you fly out and vacation somewhere for at least a week in winter. Otherwise, you will go crazy. So, and then once, I think at our 14th anniversary, my wife and I went to Maui, and that's probably my favorite trip ever. Maui is incredible. I want to go to Kauai next, but I've been to the Big Island and Oahu before as well. Yeah,
there you go. My honeymoon with June. We're gonna go to Hawaii, fresh off of our wedding. Let's see. We have a couple more questions here. Jerry asks, "Is SoFi and BMNR dead money?" I mean, so far, that doesn't mean it will continue to be, but so far it's been. Do you think NBIS will reverse?
Long term, I don't think it is, but I mean, it can for sure be an opportunity cost. You only know that in hindsight, though.
Do you think NBIS will reverse before heading to 200, and how low? I don't think it's going to reverse. I think it's going to go to 200 and then maybe reverse from there.
Yeah. If I was a trader, I would be buying and then probably sell at or just below 200.
Yeah.
Well, I'd actually put a tight stop loss is what I do, but that's not financial advice. I'm just speaking out loud. So, but yeah, higher upside is more likely than reverse.
Yeah. What do you think about going long BMNR and selling a put at 16 strike 18 months out? Bro,
I don't like tying up money that long for a put. If you're going long and selling a put, maybe I don't understand.
What, as TJ says, it's like having sex with clothes on. $16, 18 months out. It's like so safe, in my opinion. Like, I think you're on the wrong channel, brother. Like, this is, if it's like $26, 18 months out, that's kind of more my speed. But I think you'll be fine with that, personally speaking. Ethereum's on its way back up, so we'll see if it keeps up. How are you feeling, Roy?
About BMNR?
About the fact that we just got through our questions. Feeling good?
Yeah, it feels good. Yeah. We'll save some for Friday. We will have the Ron and Travis show on Friday. And we thank you guys, by the way, for being with us in the show. You guys are the ones that make it a lot of fun. Interacting with you in the comments is always a highlight for myself and for Tevis. And we wish you all the best of success this week. Enjoy the ride.
See you, everybody. Bye.